China's consumer price index turned positive in December, driven by higher food prices after a brief decline in November. Well, that's raising hopes that demand in the world's second largest economy remains steady as the economy bounces back from the pandemic. In the meantime, China's yuan is strengthening against the U.S. dollar and other major currencies. On Tuesday, $1 US was worth just under 6.5 yuan. That's close to a 2.5-year high. It's also something that could make Chinese-made goods more expensive around the world. Beijing is releasing fourth quarter GDP data next week. That's expected to show continued growth and will reveal just how broad China's economic recovery has been. For more on China's economy, let's bring in Thomas Hayes. He's chairman and managing member of Great Hill Capital. Thomas, welcome back to the show. Consumer and producer price index data released on Monday. What's the main takeaway from this last snapshot for 2020? Areas for possible concern and outlook for the People's Bank of China's action?
Yeah, well, Roe, thank you for having me on. The key takeaway was that the CPI beat expectations. It came in at plus 20 basis points versus plus 10 basis points expectations, which was substantially higher than the previous month of negative 0.5%. And as you mentioned, the improvement was due to increase of food prices, and that was largely a result of pork prices only declined 1.3% versus negative 12.5% in November, which means the swine flu from last year is largely behind us and prices are normalizing. So you had food prices, feed prices increased, and vegetable prices. Because of the cold weather, they had to ship the vegetables from southern China. That increased the cost. But when you take away food prices, non-food prices actually didn't rise at all. It rose 0%. When you shift over and you look at PPI, the manufacturing demand is certainly there. The recovery is robust. And the raw material prices were going up, metals, et cetera. So that beat expectations at negative 0.4% versus negative 0.8% estimates and negative 1.5% in the month of November. So all in all, the strong prices show strong demand, Roe.
Thomas, what have Chinese consumers been spending their money on during the pandemic?
Yeah, so this is the core thing. That the Chinese consumer has lagged a little bit. And if we look at GDP expectations, so in 2019, GDP grew at 6%, which was the lowest in 30 years. However, it rebounded in 2020. China will be the only developed nation to have positive GDP. It looks like it'll come in between plus 2 to plus 2.5%. But the real story moving forward is going to be 2021. Now analysts are projecting between 8 to 9% GDP growth, which is very, very positive. You've got tremendous increased consumer construction demand, and you have the dual circulation program, which is going to focus on internal consumption, producing a lot of the high-tech materials domestically for domestic consumption, with the intent to have most of the semiconductors produced domestically by 2025 in China. I will say, Roe, though, there are a few risks to this robust outlook that we have to keep our eyes on. The debt to GDP is at 266%, headed to 275%. And the government has stepped up and said, we need to slightly pull back on stimulus. We're going to reduce our deficit spending from 3.6% to 3%. That could have a slowdown on the consumer. However, with 1.4 billion consumers, the focus on increasing the middle class is a key initiative of the Chinese government. I think that the targets of 8 to 9% can be met in 2021.
In China's defense, you have seen globally large amounts of government spending, obviously, in response to the pandemic, these global stimulus from different countries. You highlighted some of the domestic consumer market's role there. Now, 8-9% for this year, that will likely also have a significant impact on recovery elsewhere in the world, wouldn't it?
No question about it. And it works together. So the additional stimulus coming out of the U.S., the fiscal spending now is going to measure in trillions of dollars. We're going to find out a little bit more about that on Thursday, we just had the $900 billion package. We may be getting, as President-elect Biden said, trillions of dollars of new stimulus. That's going to help the global economy. It's going to help move things moving forward and should offset a little bit of that tightening that we're going to see in China to help keep those growth targets met.
You talked about some of the reforms, some of the tightening you just mentioned. What is the outlook? How likely is it? What do you predict?
Yeah, well, I do think they have to pull back the deficit spending just a little bit. I do think that the developed world fiscal spending should offset that. I think that the targets of 8 to 9% are reasonable. There's a tremendous amount of global pent-up demand. We're going to see it in travel. We're going to see it in products. We're going to see it in recreation. And I think that's going to circulate globally. The vaccines are actually, albeit they were off to a slow start, they're picking up pace now, near over 1 million per day, and that's only going to accelerate and get people out of their houses, get the regional shutdowns in the United States in particular undone. That's going to bring back demand, and we're going to see global GDP just explode, particularly towards the back half of 2021 as we really have the vaccinations full steam ahead.
There is a slight resurgence of cases in China. Hopefully that won't throw off these numbers too much in 2021. Thomas Hayes from Great Hill Capital, thank you for joining us.
Thanks, Rowie.